Hi, my name is Chris Konetsky. I'm the publisher of the Des Moines Business Record. We're here today to host a roundtable about industrial development here in Greater Des Moines. This is part of a series of roundtables we're doing for our annual real estate magazine that came out on April 27th. And with us today to talk about industrial, directly to my left is Marcus Pitts. He's the managing director for JLL in Iowa. Directly to his left, Morey Knutson, the vice president for CBRE Hubbell Commercial. Jeff Saddoris, the vice president for Anderson Properties, and Terry Vorbrich, economic development coordinator for the city of Des Moines. Also with us is Kent Darr. He's our senior staff writer for commercial real estate. He puts together a commercial real estate e-newsletter each week. He's going to be kicking things off with the first question. From this point forward, though, we're going to be having a conversation amongst ourselves, so don't worry about the fact that we're not looking into the camera. We're just going to be having a conversation between us. So Kent, why don't you go ahead and get us started?
You know, I'm curious. I keep reading that at least some economists say that things should slow down, or could slow down in the third or fourth quarter of this year. Yet I see a lot of warehouse industrial projects on the books for this year. What do you guys see as the predominant trend in the industrial sector for 2018?
I think what we're seeing is a lot of those bigger blocks of space came off the market end of 2017 or 2018. And, if you were a 500,000 square foot user, want to be in Iowa, you really had two options at the end of 2017, and that was 101 Council in West Branch, which was a former P&G facility, and then you had Richard Hurd's building, 57-1 Park, and both of those have leases in place now coming into the first part of 18. So that larger, and I should back up, those are for single tenant 500,000 square foot blocks. Obviously there's the former Maytag facility in Newton. I think they can still accommodate a user contiguous up to about 400,000 to 500,000 square foot, but I know they have a lot of activity there. So the bigger blocks of space are coming off the market. The other thing with that space coming off the market, that's what you would probably call that Class B facility, not because necessarily the facility be Class B, but the rental rates that they were asking. So with some of those lower rental rates coming off the market, a lot of the new construction stuff I think will continue to strive here in 18, being able to push rental rates and more users focused on new construction as opposed to the second generation product.
I think it's interesting to note that of the four largest lease transactions last year, three of them were expansions of local manufacturers, quality took 5701 off the market. They bought the former Super Value in Urbandale, where they've been a tenant for a while. Daimler, with their 245,000 foot build-to-suit in Grimes, was the only new entrant into our market of large transactions. I think that's interesting from the standpoint of how robust our local economy is. I do see, however, a coming glut of space. Right now, we have, as we speak, Class A, Class B new construction, about 500,000 feet, with another 500,000 feet coming online by the end of the year. And if Graham proceeds with their proposed 675,000 foot building in Polk County, we're going to be pushing, again as we speak, within 12 to 18 months, conceivably 2 million square feet of vacancy. So I think that needs to be noted.
Yeah, and in Anderson Properties, we're more focused, I guess what I'd say, on light industrial, where the only real difference between some of the bulk distribution stuff that's going on is we're not doing 32-foot clear, we're doing 24-foot clear heights, smaller bay sizes. So we're catering maybe to that smaller tenant, regional size credit user. So where a bulk, it might be a 25 to 40,000 square foot user they're looking for, we're 7,500 to 15,000. And that particular part of the market, usually those tenants are requiring, because they're doing their office function and their warehouse function together, some office build out. So we still see that part of the market growing. There's still local, like Morey said, a lot of local businesses growing. Some of them have grown twice in this last go around here. So we're focused much more on, like I said, rarely are we over 25,000 feet for an individual user. We're more focused on the smaller user. The only exception would be the Daimler deal, which we did in Grimes, which was the 245,000 foot. But again, that market we own probably 900,000 square feet of that flex, kind of light industrial space, and we're completely full. We've got people looking for space every day. So we're getting ready to kick off another building in Grimes, Legacy 2, which will be 135,000 square feet. And again, focused toward that smaller user.
I would agree with Jeff and also with Morey, both from the city of Des Moines standpoint, the industrial projects that we've seen that we've been working with have all been owner occupied. They've been businesses that are located here in Des Moines that are expanding, that are consolidating. They may have leased space. The projects tend to be probably between 60 to 100,000 square foot and owner occupied. And a lot of it is just through natural growth of the companies, as well as consolidation. They may have been leasing space in 2 or 3 different locations, and now with the economics where they're at, they're deciding to go ahead and build their own space and move into it on a permanent basis.
What's happening in the airspace that they're leaving? What's happening in Townsend Engineering, for example, which had some move out?
Townsend Engineering is the old facility is actually slowly being redeveloped into other uses. We've moved Merrill down into the River Point West area. They took up a building, a flex space, and actually redeveloped it into a combination of office and technical innovation and manufacturing. We're seeing a little bit more of that as far as the repurposing of what's been traditionally office and maybe a little bit of retail space into some industrial. I don't know if anybody else is seeing that. We're probably maybe seeing more of that in Des Moines within our flex space areas, simply because we don't have the 200,000-300,000 square foot warehouse facilities on a competitive basis within the city. We're not fortunate enough to have that kind of land mass that can facilitate it. But we are starting to see more and more redevelopment emphasis on such as you mentioned, the old Donley plant that Hurd has. That's redevelopment from manufacturing to warehouse. So it's kind of a case by case, and a lot depends upon the zoning. We've had some discussions, we've had some inquiries about taking some older, outdated inline retail spaces and potentially converting them to some industrial use warehousing space. But that there again really is dependent upon zoning. Doesn't really work out too well for the way the neighborhoods and everything else is developed around it within the city.
Just follow up real quick on that. Will the new zoning code affect that in any way?
The new zoning code that's coming into play, our form-based code, doesn't really affect the existing buildings unless you go to actually replace them. Okay. So if you've got a large warehouse facility that's being used as warehouse, is looking to expand and add additional space, then they'll have to deal with the new codes and how that space will, what the actual form of that space will look like. But the existing space is unaffected as long as it continues to be used as it is right now.
Jeff and Morey, I'm kind of curious, and you pointed out that, Jeff, that you're kind of doing a different kind of space, but Hubbell wants to see buildings leased up before it starts more construction in Grimes. You have a building coming out of the ground that sounds to me as though it will be spec.
Yep.
Two views of the different views of the world there, or?
I can tell you what I think maybe the main difference is we have an existing base of tenants that are all growing and sitting at 3,000, 5,000 square feet. And those tenants want to grow to 7,000, 10,000. So we're almost pulling from our own portfolio to grow. And then it's been very easy to backfill 3,000 square foot space. It's almost, it's very difficult to build those small bay spaces where you've got a very local or regional kind of company that, is either coming out of their house or, coming out of some other space that's looking for 3,000 square feet with an overhead door. And they really don't care what kind of, they need some office, they don't care what it looks like. So it's more growing from our own portfolio is what we're seeing. And we've got somewhere around 250 tenants in that flex space. So we do get a lot of them that are really trying to grow. And we've been successful with it. We built Legacy 1 to kind of accommodate some of that, but there was some existing demand that was already sitting there, so we took advantage of that. And Legacy 2 will really be more focused on some of our other tenants as they grow.
I think Hubbell's philosophy as it relates to our Grimes distribution center is it's more of a traditional approach that once you achieve 60 to 70% occupancy in a new building, that will trigger the next phase. So right now we have 4 110,000-foot buildings. And as soon as we achieve 60, 70% in our newest building 4, then we will proceed with a 5th building.
Is there such a thing as a traditional user these days? Terry mentioned some folks approaching the city about converting some retail to warehouse. We see a lot of interesting users in warehouse spaces that,
Well, we
to my
certainly-
mind anyway, sort of originated with the Hubbell space.
Yeah, we did not
Grimes, but
expect
it's
at all that, our lead tenant, one of our lead tenants in our first building was going to be Sky Zone's trampoline park. And of course, the big issues that we have with, entertainment or service users is parking. And, industrial parking ratios don't come close to that of retail or office. But, we have 3 or 4 sports-related users now. We've had interest on the part of churches, but again, we get into parking issues there. So we were very much surprised that, what was going to be a light industrial or, distribution center turned into an entertainment district. But it's worked, and those kind of users, they need high ceilings, they need wide open space, and the rents are traditionally much lower than they would pay in a retail environment. So I think it's worked for both the landlord and the tenants well.
it seems like kind of comes down to ownership preference, because it's, you know, some of the like, as Morey stated, a lot of the local, locally owned real estate companies, they seem to have that mix, just because that's where those tenants have ended up. And then, you know, we do some work with Opus up in the Ankeny market, and their business model is different from that, where they just want your run-of-the-mill industrial user, industrial logistics, you know, national credit or thereabouts, and then they come in and build these buildings, and then at the end of the day, they end up selling them. So it just comes down to, I think, whatever the ownership preference is and what their business model is.
You know, I think, you know, R&R didn't expect to land Hy-Vee's 150,000 foot tech requirement. And I think the biggest reason was that's the kind of space they wanted. Wide open, high ceilings, more of an industrial feel. So, and again, you know, Marcus brings up a good point about, you know, the landlord or the developer's business model for us and for R&R. I mean, we're long-term holders. So for a merchant builder like Opus, it's institutional grade, institutional quality tenants. The credit is important so that they can sell and achieve a return.
Is Amazon changing the nature of what's happening in the warehousing and distribution market? Yeah, supposedly it has a new business plan that's has more angst than the industry.
Well, I think, you know, they were the ones that I think were largely responsible for the increased clear heights, you know, 32 clear, which Opus and R&R have had success with. For us, I mean, you know, our Grimes Distribution Center, we still proceed with 24-foot clear, and you know, for our tenant base, the increased clear height is not, the lack of 32-foot clear has not been an issue.
We've seen the same thing, to expand on Morey's point. We're not trying to grab that big bulk user that's going to rack that high. We're smaller bay, so we don't see anybody really needing to rack past that. And from the cost justification to go up, you know, to 32 feet, it just doesn't, at least from what we're trying to do, it doesn't make as much sense. We just don't see those users now. You don't have to travel far in some markets close by, and everything's 32 foot or higher. Chicago, Kansas City, even Minneapolis. So I still think some of that's coming, but to make that justification to go from 24 to 32 foot clear in your cost of your construction, you got to be darn sure you're going to grab a user that'll pay for that, the ability to rack. And we, again, some people have had success with it. I think there's a mix in the market, which has been good.
Well, some of the competitors to Amazon in the fulfillment space anyway, does that create an opportunity here, or are we enough of a transportation center to attract if not Amazon, those other businesses? I know that R&R has a mini, one of their tenants is sort of a mini fulfillment operation. It's kind of a unique business model, but are you seeing any of that in this market?
No, I think, you know, and I've always tried to understand why Des Moines, at the confluence of Interstate 35 and Interstate 80, right in the heart of the country, has not become a major distribution hub. And the best answers I've received are we're too close to Chicago. You know, Chicago grows further and further west. Also large distribution centers, Target in Iowa, for example. But for Des Moines, we don't see it. We don't see those inquiries. The larger requirements that we deal with are tending to be more light manufacturing, but not distribution.
So we track a lot of that stuff across the state, and right now we've got, we've tracked JLL, we've tracked every industrial transaction in the Des Moines market for the last 4 years, so we've got a really good database of records, and we're expanding that with, we're expanding those metrics across the state of Iowa. Right now, there's about 2.5 million square feet of active industrial deals estimate, right, across the state of Iowa. Some of those are those larger, and are they looking at Des Moines? Yeah, but are they looking at eastern Iowa? So, of course, but these groups are coming in and they're looking at Iowa, and Iowa stacked up against, Minnesota, North Dakota, South Dakota, Wisconsin, Illinois, but it's usually a 4 or 5 state search when they're doing that. And these guys are looking at incentives, they're looking at labor, they're looking at all those things. But I think within the next, there's been a couple that have been in the works for about 3 years now, but I think within the next year, maybe 2, that one of those big ones will land in the Iowa market someplace. And what that does. What that does to the market, I don't know, but as Morey mentioned, you got the Target distribution center in Cedar Falls. Nordstrom has one in Cedar Rapids. You got the Firestone stuff up here. So we're not littered with those type of users, but we're getting a little bit of attention, I think. And once one hits, it'll be interesting to see what that does to the market. How's that experience go? Were they able to staff it? Were they able to logistically distribute out of that as they thought? And what would that mean? Kind of like with the data centers.
You were just leading me to my next question.
So as those will continue to expand, you land one or two of those big distribution centers, and what's that do to it improves the market.
Do the data centers help give a marker for some of the folks that are going out and saying, here's an example of some major projects that are going on in Des Moines that give some more confidence or some more credence to the ability for Des Moines to, or are they two separate different projects that?
I see them as kind of separate, but that's just one out of 4's opinions here. But they're always something that we mention as we're taking groups through the market, but it's definitely a separate business line than I think the industrial that we're
I think does the Facebook project, does Amazon taking 2,000 acres, does that bring attention to our market? Certainly, but from I think in our world, it doesn't have much impact.
Yeah, I'd agree. That's something I know all of us keep in the back of our mind when we're saying how big our market is, because those Facebooks are all, Microsoft and now Apple, those will all be kind of owner-user deals. But we keep it in the back of our mind thinking, okay, so what happens if those uses go away? What do those buildings get used for? I know we always think of that when we're building our next building. We're thinking, okay, it's not probably going to happen real soon, but in our opinion, those are two different users. When I see the Amazon buildings that get built, those are pretty specific use to a ton of parking. I think all the Amazons still do the pick and pack, they call it, where there's people working that are packing those. So you need 1,000 parking spaces, 1,200, because they run around the clock. They've got their own nuances, whereas a data center doesn't need hardly any parking. There's not much to do with employee base in those deals. So we view those as just two separate.
So the warehouses would have a higher need on the employment component, more
Right.
likely than a data center, which
Correct.
right now would be a tricky situation here in Iowa, right?
Right.
Just as Jeff was saying, it all depends upon who your end user is. Amazon's going to have a far greater parking requirement than John Deere.
Right.
And some of the larger distribution centers that you're talking about, so.
Yeah,
No,
there's
from
no- Go ahead.
Well, I was just going to say, from an economic development standpoint, those big projects, Facebook, Apple, Microsoft, really do cause, and from our perspective in marketing the Greater Des Moines area and the city of Des Moines, they do help from the standpoint they put you on the map. Now, from an industrial standpoint, it's additional competition for construction, for labor, all sorts of things. So it has its plus and minuses, but I don't think, I would agree with these three gentlemen, I don't think it's really going to affect your industrial sector whatsoever.
And there's different metrics, so like, things that are important from a data center standpoint, when you're doing that site selection, like redundancy of power and internet, those type of things, I mean, that might not be important to an industrial or manufacturing user that when they're looking, they want proximity to interstate, or right now, there's a couple out there that, interstate visibility is important to them, so not just the logistical part, and, those interstate sites are kind of going quickly, but it's just a different set of metrics, I think, from a site selection standpoint when those users are looking.
Apple and Microsoft and Facebook, they bring great names to the Des Moines area. What we've seen, just because of the size and the labor pool market in the Des Moines area, that has really driven costs up for the rest of the world. Those data centers are largely tilt-up buildings that they just pull trailers, flatbed trailers with. I mean, that's the cloud, basically, are those buildings. And so they're just pulling in a semi-trailer full of computer equipment. And, with the determining factor a lot of times is just because we have inexpensive power and relative to the rest of the country. But what that's done to the construction cost market has, it's increased it a fair amount, especially electricians. A lot of those buildings have a lot of electric infrastructure in them. And so they pulled, I know, more electricians from the Midwest to work on those, but everybody that was here, they've been working on those facilities. So you're stuck, when you're going out to bid, some of the smaller companies are trying to ramp up, but we've seen the cost of electric go up probably 20% in the last 2 years. Des Moines, the size where it only has one precast panel manufacturer. So we're going to build that second building, Legacy 2. We had to reserve bed time for those panels back in November to be able to build it this year. It's just a function of our market, where we're located. Before all these people started coming for data centers, one precast manufacturer for tilt-up concrete was fine. You go south to Kansas City, they're being able to pour concrete on site and tilt it up, which is much less expensive. But our weather conditions just don't allow it here. So I can tell you the 135,000 square foot building that we built and just finished recently in Grimes. It's a 24-foot clear. A company named Alston Construction, who we use, is out of Chicago. We're 15% more, not in land cost, in building cost to build here versus Chicago right now. And it's just a function of everything that's going on in our market.
Well, it's things you don't think about. For example, the impact of the hurricanes had in drawing labor away from the Midwest, and secondly, drywall. There is a chronic shortage of drywall, and I bring this up because I had a conversation with Mark Anderson about this, and he had an opportunity to pre-buy several carloads of drywall just to warehouse it because of the shortage. So drywall has become a commodity.
It has.
You've got drywall futures now. So all of this adds up to some pretty surprising costs in tenant improvements. We used to quote for construction of TIs 30 to 45 days, 45 on the high side. Now it's 60 to 75 days, just because of the labor shortage. And the costs are, the increases have been pretty alarming.
Yeah.
So to wrap that all up, where that leads into is higher occupancy costs for the tenants. And I think my opening point on some of those Class B facilities, those spaces leasing, those spaces that used to be in that $2 to $3 net rent are now $3 to $4.50 net rent. And once that stuff goes, it's all new construction. And they'll constantly be flexing the market, meaning that we have 50,000 square foot vacancy in Urbandale, and someone will fill it. I think you've got space out there, sublease space at what, $3 net rate?
Well, in fact, I think to my earlier point on a surplus of space, we had a 60,000 foot sublease at Interstate Acres, and they're paying $4.60 a foot base rent. We haven't had any activity on that, none. So we just lowered the base rent to $3. Marcus's point is correct. It's going to drive up lease rates, and which is always a difficult thing for more unsophisticated users, tenants. Base rent is getting higher. Expenses are always an issue, and then the tenant improvement costs. So you've got industrial rents that, depending upon the amount of the build out, and in many cases not extreme build out, that are approaching Class B and C retail rents.
Exactly. So we have some retail space, kind of neighborhood centers on 100th Street in Urbandale. And the first ones to fill are the ones that have an overhead door in the back. Why we put it there, or if someone put it there, we don't know. But that is a big plus, because, as Morey said, you're getting rents pushing retail and office in the flex market. A typical 3,000 to 5,000 square foot space with an overhead door and maybe 15 to 20% office build out 2 to 2.5 years ago was $5.50, $6. That's $7.75 today.
How do they compare to traditional retail?
Some of that traditional retail space, we're at $8, $9.
The new construction flex space, flex product, the Ankeny is in that $8, $9, $10
Yeah.
range.
So does that all come back to the blurring of the lines between, ultimately, that somebody's not looking at the space as retail versus industrial anymore? Is that, or office? I mean, all three of those are.
Yeah, we're just being more, I don't know if creative is the right word, but much more flexible space. If we've got a building that can accommodate an overhead door and is in a retail center or even a single-story office building, where we once thought that was ridiculous to put that in, we're now looking at it to help lease it up a little quicker, because the rents are getting that close. Just what's been driving those costs is what we keep thinking about, and we really don't see anything that's going to slow those costs down. We once thought we'd see more drywallers come if the residential market slowed down a little, and I think it's slowed down a little, and we've seen a little bit more competition in drywalling, but then it's hard to get drywall. So it seems like there's always something that's creating that next issue of we're waiting for those construction costs to flatten out a little bit. But now with Apple coming, you know, unless they're going to bring their own construction crew over, we don't see anything that's going to slow it down.
What does this do to business planning for the user? It seems to me you have to, if you're ordering, if you're making your slabs in November, it's pushing you way out front, isn't it?
Yeah, it is. And we look at that daily. But the risk is you don't build it, and then by the time you can start construction, what you always try to avoid in new construction is you try to avoid building through the winter and avoid winter condition costs, because that can really increase. So the timing of when you do it has an impact on what the cost will be too. So if you wait too long, you don't want to be tilting concrete right now. You don't want to be doing dirt work right now. Those kind of things. So, you know, our construction cycle in the Des Moines market is, you know, you come out of winter and it's usually a wet spring, so that's difficult to get any kind of earthwork done. But, you know, April, May, June, July, August, September, October, and you got to be wrapping up in November.
I can remember in the not too distant past, where if we were making a proposal to a tenant that involved tenant improvements, that, as we all know in this business, things move a little bit slower than we'd like on occasion. You know, if 2 or 3 months went by before you completed the transaction, those tenant improvement costs really hadn't changed.
Right.
All right? Now, you know, we as a landlord need a decision on the part of the tenant, because those tenant improvement costs are going up rapidly. So every 30 days, it's going to be a higher number.
Exactly.
And that's what our subs are doing to us. You know, our subs are giving us timeframes. You know this. You know, for electrical, for
You're
example.
not calling the shots.
What?
You're not calling the shots.
No, not me.
Well, no.
So nevertheless, I mean, and you know, the subs and contractors, I think, have certainly become empowered by all the activity that's going on in this market. So they're in a position to use a lot of leverage.
Yep, it is. I mean, it's all, the fundamentals are still there of supply and demand. You know, right now, there's just a high demand for labor and construction and most of those trades. And at the same time, there's a large demand to start construction projects. So to Morey's point, what we've been doing is, when you talk about how someone has to plan or forecast, when we put a proposal out now, it's good for, the proposal's usually good for a week or week and a half. The pricing's good for 20 to 30 days, and we put that right in the proposal now. So, because we've had to explain too many times as you work on deals why pricing keeps going up. So it's going up monthly.
You talked about that vacancy component and I think you said the glut, right? What type of users or what would fill that? I mean, is that more growth from within, a combination of people coming from outside? What does that look like over the next few
You know,
years?
again, I see, you know, the predominant factor in our growth has been, you know, local, regional expansions. I think as we speak, you know, and Marcus brought up a good point, you know, these large requirements that have a multi-state search area. I think in large part we have not been very successful in those, in winning those. again, it's largely local.
I think, ag and automotive, if you had to sum it up, I think, I mean, that seems to be,
Yeah.
that some of the groups that take down some of the bigger space or that they're looking, those are Iowa does a lot of ag and automotive work, so I think those are probably likely candidates to take down some of that space.
Well, I think a great example of on the ag side is quality manufacturing. They had a new requirement earlier last year that started at 70,000 feet. And then it grew to 100. And I thought we were going to be successful in landing them in our new building 4 until their requirement grew to, as we speak right now, 250, 300,000 feet. So that the only property that could accommodate that need was 5701 Park. And while Quality is not using the entire 500,000 feet, they're going to grow into it. But that's, I think, that's a real compelling local success story.
And they'll be subleasing a portion of that space back until they, given the, taking the whole thing and subleasing.
Yeah, they're
some back
subleasing the space to a logistics company.
Protect the future.
Yeah.
You mentioned the small users that were, using that little small space and people that were growing into some newer space. Do you feel like that you're pretty confident that there's going to be enough of those small ones that are just starting?
We do. We see a
And
lot.
what do those look like? What type of?
A lot of them are, a business that started up in the last 5 years, family-owned or couple investor-owned companies, and the range of things they do are big in scale, but they're just a small piece of it here, and they're from here, and they want to stay here, and they figured out that they can ship out of here because it's just become easier to ship all over the world. But I would say 5 to 7 serious inquiries a week are coming in to our office. I need 3,000 square feet. I'm in a 1,500 square feet. I need 3. And that's, they're doubling in size. In their world, that's big. And we're more apt to take those on after understanding what their business is. But there is a lot of small business still going on in the Des Moines area. And we see it most likely, its preference is to be on the west side, mostly because probably themselves and a few employees live on the west side. So, but we're comfortable enough that we're going to backfill that tenant that we're taking from 3 to 5 or 7,500 easily with the carpet and the paint of the office space and a little downtime. That's what we're trying to accomplish. But we think it's strong.
We see that demand in the city of Des Moines. I think you see that demand for small business growth throughout the metro area. Just unfortunately, most of the product that you're talking about is on the west and north suburbs. And,
Yeah, right.
Because we have those inquiries every day in our office. And, we don't have flex space with that overhead door in the back for 3,000 square foot. We just don't have that product available because so much of it has been, with the land and the building out west and to the north. But that demand, quite frankly, small business growth is all through the Greater Des Moines metro market.
Terry, it reminds me too, what's going on happening with the southeast agrivirgin area? That would seem to be pretty decent land, all of it.
It is. The city continues to acquire. We're actually in the middle of acquiring another large parcel of adjacent land. It's a little bit different industrial use that we're seeing there. Here again, it's owner occupied. It's Des Moines Cold Storage with a new facility. It's continual expansion by Helena Chemicals, some of the companies that are there. We do have a lot of inquiries from the standpoint of looking for 10, 20 acres of industrial for new manufacturing, but here again, it's owner occupied, it's not competitive warehouse space. The other issue is you got to have a little bit of a company with management that's a little forward-looking, because most of the land that we're acquiring are former salvage yards, okay? And we've scheduled improvements into Vandalia Road. And obviously, the city is still working and moving forward with Martin Luther King from East 30th over to the bypass. Pleasant Hill is putting in improvements to their intersection of Vandalia and the Highway 5 bypass. So we see that as a real growth area. But right now, you go over and drive around. You need management that wants to be on that side, in that area, that needs a lot of power, needs a lot of sewer capacity. Those are there. We're seeing a lot of expansion with, if you haven't driven Martin Luther King Parkway over to Southeast 30th lately, I encourage you to do that, because that roadway has really opened up a lot of space there for redevelopment.
It provides a great view of downtown too, if you just want to take a picture. It's wonderful.
Is the Hy-Vee taking up the industrial space, have you seen more inquiries from traditional office users trying to look at things like that, or is that not really caught on in that way? Are they unique enough that it...
I haven't really seen that.
No, again, we have the parking issue.
Mm.
We just can't accommodate it. I think R&R was successful with Hy-Vee for their tech requirement because they had additional land to expand the parking. But in parks that are already developed, that is usually not an option.
We took a run with a warehouse building in Grimes with the John Deere Group, ISG, I think it is, Information Service Group, that's in a lot of R&R's office space. They're all IT or tech-driven people, so we were trying to push them into something that's very open, you know. They were a highly collaborative group. The parking was our issue, and I think they ended up they're in building their own, I think, in North Park Drive.
Right.
Dale, and then go into more traditional space. I think they're going to own their own, but we've dipped our toe in that a little bit. If someone's kind of that open office, highly collaborative, doesn't need a ton of build out to do it like Morey says. More often than not, it's parking that's driving.
I have a question. 4 years after property tax reform, do you run into folks who are looking, who complain about commercial property taxes being a factor that is not in our favor, you know, dissuading people from coming into this area?
Well,
just Norwalk's going to announce, certainly by the time this is there, but probably this week, that a manufacturer's coming in on the south side of town there. And one of the things that I guess delayed the process was companies' analysis of what was called Iowa's high commercial property tax.
Well,
And it was really the first time I'd heard that.
yeah, our world tends to be in the large part in the western suburbs, Grimes, Urbandale.
Or we have to change that.
You got to get more land, Terry.
Yeah, that is an issue.
And we benefit from industrial tax abatement. So, 5-year decline, which is very beneficial. So we don't see that as a factor. It really becomes an issue though on fully mature buildings where, the taxes are fully kicked in. But for 5 years, the tax component of expenses really is not an issue.
We hear that discussion every day.
Do you?
Yeah. Obviously, working for the city, Office of Economic Development, that's one of the things that comes up in discussions, whether it's owner-occupied, whether it's competitive, whatever the case is property taxes. And a lot depends upon the type of business that we're dealing with, and whether it's owner-occupied or competitive, because Iowa has a single factor corporate tax, so your corporate tax liability is on the profits that are generated through revenues, sales in the state of Iowa. So if you're dealing with a company that has 99% of its revenue outside the state of Iowa, only 1% is taxed from an income tax, corporate income tax standpoint. So they take a look at that, they weigh that between the property taxes. Now, if you're dealing with an industrial property, that's going to be one of your major expenses, property taxes and utilities and so forth. But they weigh that, and they look at the overall tax burden that their individual entity is going to have within the state of Iowa. And national studies continually show that the state of Iowa is in the middle of the crowd, about 25 out of 50 states, when it comes to total tax burden. So just, you can't really segregate out just property taxes as a main burden. Industrial warehouse space, it's a major factor. Okay? Because it's
As a percentage.
As a percentage, because they're not a large employer. We have low unemployment tax rates, et cetera. And then they look at whether or not they're going to have a corporate tax liability. So when you factor all of those in, Iowa is very competitive on its overall tax burden.
I have another question that occurred to me. When Chris and I walked out of the industrial roundtable last year, we thought, a couple of poor reporters, if we could scratch a couple nickels together, we ought to be buying industrial properties. Is that still true? I mean, it was a pretty attractive.
If you can find it.
If you can find it.
Yeah, so, like, Anderson's, Hubbell, Des Moines traditionally has been long-term holders of real estate as investors, as a broad sense. And when we have products that come up, like, for example, Corporate Woods Building 1, when we sold that for Opus, that was the 207,000 square foot building, power distributors and Keystone in there. We had interest from groups literally across the U.S. and we partnered with our capital markets team out of Chicago on that. The winning buyer ended up being an East Coast buyer, but I mean, that single tenant, long-term net lease product in Des Moines is very tough to come by. You might be able to trip across a property that has, a little bit of vacancy, maybe some more localized credit, but what as Morey alluded to, the institutional buyers looking for in Des Moines, that product is tough to come by. I think the Dr. Pepper Snapple building on the northeast side of Des Moines, that sold recently. I know when the former SuperValue warehouse was up, there was a couple institutional buyers looking there, but that ended up being purchased by the tenant. But that product comes up, and if available, there's a line of people that would like to get into the Des Moines market.
Oh, yeah. There's no shortage of capital, number one. And the institutional investors have always had an interest in our market. And, with the quality of the product, the new product that we're doing now, with long-term credit tenants, the pricing is very high. So the investor is achieving less of a rate of return, number one, because of the competition for the product and the demand.
Yeah, the Daimler project that we put in Grimes, the 245,000 square foot, it's got a longer term lease on it. We don't want to sell it, but I got to tell you, some of the outside institutional money that's looking at it from the coast, that a 6% cap rate is a bargain to them versus what they can get on the coast right now. We're getting a lot of looks on that building, but again, it's just not something we're interested in selling. And anything you've held on to for, a while and started to depreciate, you might get a great price on selling it, but you've got to find an exchange, a tax exchange to go into that you're equally as comfortable in our minds. So we always kind of come back to the opinion of, let's just keep what we've got. We built it, we know what we got. Even though someone wants to pay us more than what we think it's worth, we've got the other problem of paying tax on it if we sell.
And again, that's very much a local mentality, whether it's R&R or
Yeah.
Hubbell or Anderson. Opus, on the other hand, their business model is they build it and sell it. That's what they do. And there's no angst about that. That's what they do. Whereas we tend to be long-term hold.
So what prevents, or why wouldn't somebody that was looking, instead of trying to buy something that's existing, take that approach and try to find and create, build from outside this market?
I think it'll come. JLO, we have a proprietary software called Blackbird. And what Blackbird is, think of Google Earth on steroids. It would be good to connect with you so we can get some of the southeast, the southeast connector properties on here. But essentially what we have done is we've outlined every development site in the Des Moines market. Now we're spreading this to Iowa, but every development site in the Des Moines market for industrial from 10 to 200 acres. And then from a building standpoint, we've outlined every building from 40 up to 5701 Park, so 40 to 500,000 plus. And we have who the, for the land, what the price is, zoning, who the utilities providers are, all that information. Same on the industrial. If there's vacancy, we'll track some of that there, but it's really not meant for that. But what we use that for is for when other out-of-town groups come in and say just exactly what you said, hey, we're kind of considering this market, what do we need to know? We can send them a link to that tour, we'll update the tour for that and run them through, here's where all the potential sites would be, by the way, here's a market report, here's where all the vacancies at, here's where the rates are trending, here's the last 4 years of historical deals in this size range. So we're starting to package that up, not just for Des Moines, but the state, but I think you'll see those groups, additional groups start to come into this market. I just can't predict the future.
More so to get an anchor tenant for their project. Opus, on the other hand, when they came into the market, they bought the Ankeny land. They had a risk tolerance, and to their credit, it's becoming a successful project. That's, in my mind, that's why you have not seen a lot of national interest in Des Moines, because they just don't want to bank land.
And we assisted Opus with that project from start to finish, so the initial land search to purchasing the land, leasing up the building, and then disposing of the building at the back end. So all those tools that we were kind of, rather than recreate that wheel every time, we were kind of listening to what Opus was telling us. It was a really good partnership and still is, but listening to kind of what they were saying, what they were looking for. And so next time they want to look at a site or somebody wants to look at a site, we have that playbook ready to go.
We're just about out of time, so what I'd like to do is we get to the end. Is there something we haven't talked about that we should have talked about, or can follow up on at a later date? So, Terry, why don't we start down with you? If you've got anything that we haven't talked about that we should have.
No, these gentlemen are the experts in the industry. I kind of said, just listen to them, and I pretty much hit on most topics.
Can I make a suggestion then, so we can get you on tape? Can you talk a little bit about what the transload facility does?
Transload facility that's being proposed over on just off of East Martin Luther King at about Southeast 15th and Southeast 18th is a transmodal facility. Basically, will move product off a rail onto trucks and from trucks to rail. Right now it's moving forward. The operator is working with the 4 different railroads that all kind of converge right at that location. to come up with operating agreements and switching agreements, which will be the first phase, and they anticipate getting that done probably by the end of 2018. So right now, the transmobile facility, I think the closest one is Omaha, and this operator actually operates the facility in Omaha. So it may lead to more industrial demand in that Southeast area, just from the standpoint, especially if you have a user that is a heavy rail user, okay? But more than anything, it will act as a cost savings to local industrial companies throughout the central Iowa that may be, trucking product over to Omaha or driving trucks over to Omaha to pick up product off a rail and bring it back to the facilities.
So it's cutting that last mile we hear about a lot on the retail side.
About that last
Doing
150,
that on the-
about that last 150 miles.
Yeah, on the industrial side.
On the industrial side.
I'm sorry to interrupt, but
Yeah. But that's the other thing, is that we do have, that's one of the reasons that I think that southeast area still has tremendous amount of rail service and rail availability. We have industry over there right now expanding and putting in rail spurs. We have worked with a couple of different companies. Here again, these are locally owned, industrial, owner occupied, that really look at that area because of the rail service and their need for rail spur, which is becoming, options for that are fewer and fewer every day.
yeah.
I think we've covered most everything I kind of had in my mind. We focus more on the western suburbs for where we're looking. Urbandale's kind of out of industrial land. Grimes has a lot of it, and it's all coming at them fast. And they're trying to react as fast as they can.
Jeff, we're happy to visit with you about that as well.
We need to get some more in the city limits of Des Moines. Just as Marcus pointed out, what owners and developers are trying to do is pick that next place they're going to go once their park they've got now gets filled up. And communities are always doing master planning and trying to find areas that can be, multi-use facilities and residential and commercial, and industrial kind of is the not as sexy stuff, so it gets kind of pushed away from some of the main transportation corridors. So that's one thing we're trying to do, is just keep thinking where and planning with some of these communities, even as Terry mentioned, that so we can get the industrial a little closer, so that those trucks aren't driving through a lot of different neighborhoods to get to a main highway or a main road. So it's just more planning that we're thinking about in the future.
I think, in conclusion, it's going to be interesting to see how we backfill this the existing space and newer space that's coming online within the next 12 to 18 months. I certainly hope we do. But I think this has been a good session, some interesting views.
And JLL, we had a couple larger distribution centers that have looked at Iowa, and one in the last couple of years, and one we lost to Minnesota, one we lost to Wisconsin, and we assisted those groups with their statewide surge. Getting the information for large industrial users, call it 50 to 100 acres, and getting viable sites for them across the state of Iowa is no small task. And that's why with Blackbird, once we went through it once, we're like, we have to start saving this information, because what we were finding is the person would ask us again, another search like that would come, and we'd be starting from square one. We're like, we just learned this lesson that this wasn't easy to do, and now we're back in the throes of it again. So we're tracking all that information on these sites, but what it would be nice to see in the next 2 to 3 years as some of these groups continue to look at the state, some may land, some may not. Why are we losing them? Is it location to where the owner lives? Is it incentives? Is it labor? I mean, what are the factors that, because we're reading about a lot of these in the paper, and they're all, as Morey said, we're not reading about them at the end of the day with an Iowa address at the end. So on some of the state of Iowa stuff, it'd be interesting, maybe as a follow-up, to see if we are losing out on some of these, why that is, and how do we better position in the future.
Does the certified sites, the state certified site program, does that help?
we have not used that yet.
Mhm.
But all the information that we have, the sites that we did in the past was, I don't know, probably 12 months was the last one, and that was the one that went to Thief River Falls, Minnesota.
I think having a certified site is certainly an advantage. I mean, at the end of the day, those sites are ready to go, right? Whereas...
There aren't a lot of them.
No, there aren't. But, in contrast to a 50-acre soybean field,
Mhm.
Right.
and utilities and the grading issues and on and on and on, so.
The two marketplace big.
The two that you said we didn't get, what type of projects were they?
Distribution centers.
If you had a hunch in those situations?
I wouldn't speculate, no.
You don't.
What kind of product were they distributing?
One would have been dry goods, I would call it, and then another was more technology-based.
Okay. Okay. Well, I often wonder that, because we see a lot of those come through the office, and just as you're saying, and you always question as to how close they want to be to the end users, the population base, and how big an area they're really distributing to. That's when you talk about, Amazon, and you read about two-day delivery, and now with them getting into the food industry, I've read some articles that talk about 2-hour deliveries to their population centers. And you start to wonder, well, those are big distribution centers, but you got to be 4 to 6 hours within your population center, your customer base. It's kind of changing the market.
And maybe shifting it more towards actually, if you're Amazon, for example, if you were trying to serve Des Moines only, right, in order to be able to have that same day or 2-hour delivery
Right.
type thing, it would be smaller space rather than trying to go for the big mega.
Right.
I-
Yeah, I don't know.
Interesting.
Yeah.
Well, that sounds like a good topic for the next time. So, thanks again for watching today. Again, and a big thank you to all of you. Kent Darr is our senior staff writer. If our best story ideas always come from our readers. If something today spurred a thought and you want to reach out to us, Kent Darr's information will be up on the screen. So I'd encourage you to do that. And once again, thank you guys for today. Appreciate it.
Thank you.
Thank you.